Chris, I'm going to start with you. What happened overnight to get investors, at least here in the U.S., dipping their toe back into this market?
Well, I think we'll see how deep they want to put that toe in the water. We've seen futures are up this morning, but they are up off their highs. I think what investors want to see is that, this expanded outbreak that we're seeing that's moved past China might be starting to slow. But I have to be honest with you, Alexa, in the near term, I think this is a potential dead cat bounce. These types of adjustments to economic expectations, earnings expectations from an event such as this, they don't happen in one day. And I think in the near term, the market's going to continue to trade day to day based on what it hears last.
Francis, how concerned do you think the average investor should be, the average person on Main Street? I think a lot of people are waking up today, a lot of front page news coverage on the major sell-off yesterday. They might see stocks rebound, but I suspect it could damage consumer confidence.
Yes, yesterday was obviously very shocking. If you're looking at a technical chart, we had it was pretty much an orderly reversion to the mean after multiple all-time highs. But it happened in one day, which I think is the shock that was sort of going around. I don't know that retail investors participated too much in yesterday's selling. I think a lot of the volume and volatility was more sort of the algos kind of going back and forth, trying to reprice things that you can't reprice because we don't actually know the ultimate impact of coronavirus. And obviously it's a supply issue, so we don't know if the Fed's going to be there. They're saying that, they can only really fix demand issues. So in that case, there's a lot of uncertainty. I think I agree initially that there's a dead cat bounce, but then it's going to go back to the ISM numbers coming out next week and also the GDP number on Thursday, because this will revert to the economic data once it's passed.
Then what's the strategy for the average investor? If market volatility is coming back, what are they to do?
The average investor at the moment probably should sit tight. I think if the average investor sees that we have further slowing in the economic numbers, then I would ask your financial advisor to take some risk off of the table. Mm-hmm. But the other thing that we've got going for the U.S. markets is that, European and Chinese markets topped out in the third quarter of 2017, and they looked like they were, bottoming out and having a reacceleration, which was going to make the United States look expensive against their cheap equities. But now that they have more concerns, then the U.S. is still the safe haven, and that's going to be true of the bond market and equity market, simultaneous to the dollar and gold, as it has been for the previous quarters.
Chris, I want to talk a moment about the bond market because it signals continued concerns about the coronavirus. We're seeing a little bit of a bounce back here, a modest bounce back, I guess, in equity futures in the U.S. market. But what is the bond market really telling us if you were to read the tea leaves? Because the yield on the 10-year Treasury now near its lowest level in about 4 years.
Yeah, I think what it tells us is that people continue to look for the safety trade that Francis was alluding to. And we can look, not only at the bond market, we can look at gold, which has continued to trend higher, but we can also look at some defensive names that are, again, more U.S. focused, more inelastic business models. These are your AT&Ts, your utilities, for example, things that people will continue to buy no matter what. We're also seeing the expansion into some other areas, kind of a different defensive coronavirus play, which to me is particularly telling. You saw shares of Clorox, for example, really popping higher yesterday, as well as a lot of shelf-stable food companies, be it Campbell's, Kellogg, that sort of thing. So I think the mixed message is that people are still unsure about what's going to happen, and they are going to continue to shift to ports of safety in the near term.
Chris, do you think a large component of the sell-off yesterday was Bernie Sanders related?
No, I don't, Brian. Could he have some role? Certainly. But I think if we look at the evolution of the coronavirus and the impact, everything from a month ago where it was really just or thought to be, I should say, just a China March quarter event. It has exploded since then. Last week we saw Apple rescind their earnings. We saw United Airlines totally rescind their earnings for 2020. Trip.com said we're not even going to report the current quarter because we can't even begin to understand what the impact on our business is. To me, it's that level of uncertainty that's rippling through the markets at the same time where the virus expands its reach outside of China. That, to me, is what investors are really grappling with.
Yeah, for sure, as it now spreads throughout parts of Europe. Jared, you've got a look at the world map. It looks a lot better than it did this time yesterday.
Well, it does on the very left here. That would be the U.S. futures. They are up, but 100 Dow points after a 1,000-point drop is just a drop in the bucket here. We have a lot of red, especially in Tokyo, which was closed Monday, so they had to take a lot of pain overnight. They were down over 3%. The Kospi in Korea up over 1%, but then a lot of weakness in Germany and France in particular. You look at the European auto sector, it's just taken a bath recently. So Frankfurt is down 0.5%, the CAC 40 down 0.75%, as is London. But if we look at what happened yesterday in the S&P 500, it was a painful day, but we did land at support.
All right. Always nice to find a little support. And here we have a new trading day at the New York Stock Exchange and the NASDAQ after stocks took a real beating yesterday. We'll see what investors have in store for us today. The Dow up. It's decent. I mean, Jared's right. We were down 1,000 points yesterday. We're up 127 right now in the early going.
Not bad. Francis, what are some of the top trades that you're putting on today?
I'm just sort of staying where I've been. REITs, utilities, U.S. dollar, and, Treasury bonds. That's where I've been for quite a while. I've had great returns in that area. And I'm looking for oil is still actually above $50 a barrel. So I'm looking for a little bit of a reversal in some of the oil stocks, even if it's short term. Mm-hmm. And of course, that's dependent upon coronavirus. If coronavirus passes and looks to be less worse than we think it is, then obviously oil is going to respond favorably, as are the equities. And if it is very, very bad, then yesterday mostly priced that in, I think.
No tech stocks yet?
Tech stocks, I'm still hanging out in a couple of tech stocks. I've been there for a while. For me, it's just when to take capital gains. I think as we go forward, we're going to have to count on growth, inflation, Fed policy for those high valuations in the tech stocks to remain favorable.
Chris, after that drubbing yesterday for the market, anything look particularly attractive to you on a valuation basis?
Well, we're long-term investors at Tematic Research, and we're always using our investment theme. So, there's a number of areas that we continue to like, everything from, the 5G build out that's going to spur incremental chip demand to the accelerated, thanks to the coronavirus, shift towards digital shopping, as well as, cybersecurity stocks, particularly following the MGM data breach that was announced last week. So there's a lot of areas. But like Francis, we're not anxious to plunge in just on the drubbing, to use those words, that the market received yesterday. We never want to catch a falling knife. We prefer to sit back and let the market settle out and then scale into the positions that we recommend. Again, our timing is not this week, next week. It's more 12, 18, 24 months.
Chris, I know you follow next to or close to every stock in this market. What about GE? CEO Larry Culp came out with a long annual letter yesterday. It was pretty good, pretty upbeat. That's what he does, but the market has been buying or selling or been buying on everywhere that he's been saying.
Well, I mean, a couple things. One, find me a CEO that isn't some part cheerleader for their business. It's in many ways just like the Federal Reserve has to be with the chairman, right? If they go out and they say something negative, all of a sudden it is a self-fulfilling prophecy. So I think we have to be a little careful about the comments. I do think that we're going to see some ripple effects from the things that are going on, whether it's Boeing related, whether it's the coronavirus related. And I think that ultimately, people will start to circle back to the economic data, just like Francis was saying, and that is going to really tell us the tone and the expectation that we should have for GE shares.
Francis, what are your expectations for the Federal Reserve? There was some talk that perhaps they would have to hold an emergency meeting because of coronavirus, because of the expected hit to the global economy. What are your expectations, at least in the short term, for the Federal Reserve?
Well, the Federal Reserve has injected a lot of liquidity in the system, as we remember that the repo market had some issues in September, and we've put probably $500 million or so, actually probably more than that at this point, into the system. And they're going to start tapering that repo adjustment. So that's actually a tightening move. As far as an emergency meeting, I don't see that because they don't have enough numbers from coronavirus to actually calculate it yet. So it's going to be interesting to see what the meeting is like in March. I do see some rate cuts coming this year, but I think that it's going to be more dependent on any further deceleration in growth and inflation. rather than coronavirus, unless coronavirus gets materially worse. But I don't expect them to do much of anything for probably a few months. And the thing that's the biggest risk in the system, if you take out coronavirus, is the fact that if they taper this repo liquidity injection, and then we see any kind of credit issues, that's going to be a real catalyst for a different idea about the economy and the trend, particularly in equity markets. So that's what I'm watching for. And if coronavirus is the catalyst for a credit problem, it'll then become more about the credit problem than the coronavirus, but that could be a catalyst.
Chris, what's the bigger risk to the market right now, the Fed or the coronavirus?
Oh, without a doubt, it's the coronavirus. That is the big unknown. I think the Fed will continue to monitor the data. Maybe we get a cut sooner than expected. I think the Fed-related risk, Brian, could be this, is that the markets begins to anticipate a sooner than expected rate cut such that it sets us up for a disappointing event. But I think we have weeks to go before we really get there.
And Jared, yesterday the NASDAQ slid about 2.8%. Today it's trying to bounce back. You're taking a closer dive into that index.
Yeah, we got the big cap names all in the green, coming off their early highs here, but Microsoft still up 1 3/4%, Apple up over 1%, and then Facebook, Amazon, Alphabet hanging in there as well. And if we look at some of the leaders today, we can see really just kind of a risk-on reaction move to yesterday's risk-off move. So KWEB is a Chinese internet ETF, which is a good bellwether of what's going on there. We also have emerging markets. That's up over 1%. And to the downside, we're seeing banks under pressure again, especially with the yield curve contracting. We saw the 10-year T-note yield, as you said, testing those 4-year lows, which are record lows.
Yeah, that looks like some lame buying to me after today's sell-off in some of those big tech names. But we'll leave it there. Chris Versace, Francis Newton, Stacy, Jared Blikre. Thanks so much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.